Nobody's buying electric cars anymore, or at least that's what it looks like from the outside. What started as a booming trend now seems to be slowing down, and in some places, stalling completely. The electric vehicle revolution that was once praised as unstoppable has hit a major bump in the road. In early 2025, Tesla shocked the industry by reporting a 13% drop in deliveries during the first quarter of the year, the worst performance since early 2022. Analysts were expecting over 390,000 units, but Tesla only managed to deliver around 336,000. This decline has raised serious questions about whether the EV hype is fading, and if so, why. Tesla isn't the only company struggling. Ford saw its electric vehicle sales drop more than 30% in the second quarter of 2025 in the US, and other manufacturers like Kia reported a 50% slump in some of their EV models. Consumer interest in EVs is also cooling down. In the United States, surveys show that willingness to consider buying an electric car dropped from 59% in 2023 to just 51% in early 2025. That might still sound like a majority, but in a market that relies heavily on momentum and confidence, it's a big warning sign. Globally, the picture is slightly better, but the growth is slowing. EV sales did increase slightly in the first quarter of 2025, but the pace is nowhere near what it was just a few years ago. In emerging markets like Thailand, Vietnam, and Indonesia, EV sales rose by over 40% in 2024, but that was mainly because internal combustion engine vehicle sales fell, not because of a huge jump in demand. Even in Latin America, where EV market share doubled, the absolute numbers are still tiny. Europe is holding on better, with EVs expected to make up about 25% of total vehicle sales in 2025. But even there, the growth is uneven and driven mostly by government policies. Tesla's struggles are particularly alarming because the company has long been seen as the face of the EV revolution. In Europe, Tesla's sales dropped 49% in May 2025 alone. In Germany, one of Tesla's most important markets, sales plunged more than 70% in February. In China, the company has now experienced 7 straight months of declining sales, with an 18% drop between January and May. Part of the reason is stiff competition. Chinese tech giant Xiaomi entered the market and racked up over 300,000 pre-orders for its new EV model in just 1 hour. At the same time, traditional Chinese EV makers like BYD, XPeng, and NIO are thriving, delivering tens of thousands of cars every month. One of the biggest reasons behind the slowdown is simple: politics. Elon Musk's increasing political involvement and his public support for controversial figures have alienated a portion of Tesla's customer base. In the US, many progressive and environmentally conscious consumers are now hesitant to support a company whose CEO is seen as being aligned with political figures they don't support. Musk himself has even admitted that his political stances may have hurt demand. In a country where identity politics play a huge role in consumer behavior, that's a big deal. Government policy is another huge factor. In the US, lawmakers have been fighting over whether to continue offering tax credits for electric vehicles. The $7,500 federal tax credit that many buyers relied on to make EVs affordable is now under threat. If it disappears, the price gap between electric and gas-powered cars will widen, and many potential buyers might walk away. Policy uncertainty has also rattled investors and automakers, causing delays in new EV model launches and factory expansions. Even in states like California, which have historically supported EVs, changing regulations are making automakers nervous. Then there's the infrastructure problem. Charging remains one of the most frustrating issues for EV owners. Despite promises of nationwide charging networks, many areas still lack reliable fast charging stations. Long charging times, range anxiety, and maintenance issues are causing second thoughts among buyers. Even though battery technology is improving, it hasn't advanced fast enough to completely solve these problems. Many people still prefer the convenience of filling up a gas tank in 5 minutes and driving hundreds of miles without worry. Price is another major issue. While electric vehicles were supposed to become cheaper over time, the reality is that they're still expensive compared to traditional cars. The average electric car in the US still costs significantly more than a gas-powered vehicle. Automakers have tried to bring down prices by cutting features or offering discounts, but those moves often hurt profit margins and make the vehicles less attractive. Tesla, for example, slashed prices across several models, which helped temporarily boost sales, but also raised questions about long-term sustainability and brand value. Dealerships are also part of the problem. Most car dealers make money not just from selling cars, but from servicing them over time. Electric vehicles require less maintenance, which means fewer trips to the service center and lower profits for dealerships. That creates a natural resistance among dealers to push EVs. Many EVs also sit on lots longer than gas-powered models, adding to dealer reluctance. Without dealer support, manufacturers struggle to create the kind of retail experience that makes EVs appealing to the average customer. In China, the situation is slightly different but equally complex. The country has been producing electric vehicles at a massive scale, leading to overcapacity. By mid-2025, Chinese factories had the ability to produce almost 49 million vehicles annually, far more than the market could absorb. This led to a price war, with more than 40 automakers slashing prices to stay competitive. The Chinese government even issued warnings that such aggressive price cuts could damage the entire industry. Yet, the race to dominate the global EV market means these price battles are unlikely to stop anytime soon. The battery supply chain is another growing concern. As more automakers enter the EV space, the demand for lithium, cobalt, and nickel is skyrocketing. This has raised fears about mineral shortages, price volatility, and environmental impact. Some analysts are now suggesting that hybrids, vehicles that use both gas and electricity, might see a resurgence in the short term because they offer a compromise between efficiency and availability. All of these factors have caused a real sense of hesitation in the market. Chemical suppliers like Umicore have already written off over €1 billion in battery investments due to slowing EV demand. Automakers are delaying launches, scaling back production plans, and in some cases, reconsidering their EV strategies altogether. The excitement around EVs has turned into cautious planning. But it's not all doom and gloom. Some experts believe this slowdown is a natural part of the EV adoption curve. After a period of rapid growth, the market is adjusting to real-world challenges. It's not a crash, it's a recalibration. Automakers like Volkswagen and Renault are preparing to launch more affordable EVs by the end of 2025. These models are expected to hit the sweet spot in terms of price and features, potentially reigniting interest among budget-conscious consumers.